The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to Basics of Binary Options in Knockouts. My name is Todd Rich. I'm the head of education here at Nadex. Thank you for joining us today. I'm sorry I'm a minute late. I was getting a fresh cup of coffee. In the event that you experience any issues with the sound, just want to put this out there at the beginning. This is being delivered over the internet. If you have a technical difficulty, you can often resolve it by simply refreshing your browser or logging back in. The internet can't always be 100% reliable. So I like to mention that because we've had people have issues. It's been an interesting week with the internet, at least here in Chicago. So, with that, I want to get moving here quickly. If you give me a second, here we go. Okay, basics of binary options and knockouts. Before I jump into the session, I am required to put this disclaimer slide up. This webinar, as are all of our webinars, are sponsored by our compliance department. And trading on Nadex does involve risk and might not be appropriate for everyone. It's important that you note that any trading decisions you make are solely your responsibility and are at your own risk. The other thing I'd like to point out here, and this is very important, is I am going to be using the Nadex platform, the new Nadex platform, as I go through explaining our products and showing you some of the cool tools that we've got to analyze them and how to trade them. Please do not take anything I say as a buy sell recommendation or a buy or sell recommendation. I am doing this strictly for your education purposes. And so it's important that you take that as such because we are going to be looking at live markets. So as we go through the examples, we're going to be looking at live markets, and I just want to make sure that you don't take anything I say as a recommendation. Okay, so what are we going to actually be covering in this session? One, I'm going to do it in this order today. Sometimes I do it in a different order, but because we're talking about binary options and knockouts, I'm going to start with binary options. I'll define them. I'll show you how you can understand them. It's the nice thing about our platform is it's very graphical, so it makes it a little bit more intuitive to understand what it is that you're actually looking at and what it is that you're trading. I'll then jump over to knockouts. Sometimes I find knockouts to be a little bit more intuitive for folks, which is why I do it in the reverse order sometimes. And I will be doing this all on the platform. So the other thing I would like to mention is this is very much an interactive session. So I've got my colleague Sophie in the background. You have a little questions panel in there. I would encourage you, please type in questions. You want to, and in fact, I'll try throughout the session to monitor what you're putting in there as questions, but keep Sophie busy. She's nice enough to join us, and she is an expert. Interestingly enough, I'm going to right away. I knew someone was going to have an issue potentially with sound, so give me your. Okay, and you know what? If anyone can hear me, just give a shout out to Sophie saying, "Yeah, we're all good." It's just nice to know, but there's always going to be a person or two where their speakers aren't set up right or the internet isn't quite working. So again, Sophie, you can always tell someone if they're having a challenge to refresh their browser or try logging in again. So awesome. Excellent. Thank you, everyone. It sounds like we're good. I know there's always some that have challenges, and let's get into it. All right, I am going to change what you're looking at, and we're going to jump over to our awesome new website. We're pretty proud of this. Let me do this as well, so this will make it a little easier for you to see it. There we go. Make it nice and big for you. I want to make it as easy as I can um, for you to be able to see this, because I know sometimes you're on smaller screens. So I try to zoom in as much as I can on the platform. Okay. One, I mentioned this is interactive. Please, if I do something and I go a little too quickly, or I don't get to a specific point that you were looking for, type in a question to Sophie. She will definitely answer it for you. The other thing I'd like to point out, on our website, there is a contact button. Uh, Email us. While we've got Sophie right now who can answer questions for you, whether it's about the products, our platform, your account, uh, funding, withdrawing funds. Please, she's an expert. Engage with her while you've got her right now. Um, but you can always email us. And then I always like to point out is we have this contact us, this chat down in the right hand corner, which I'm going to make bigger. And you can always drop in a note to us. We will get back in touch with you, but we want to make ourselves as available as we can to help you out on your journey. The truth is if you're successful, then we're successful. So we want you to be as successful as you can be. And so if you're having any challenges or issues, please let us know. We are here to help. You know what? I want to go back here. Okay. Now, I am going to go ahead and log into the platform in the upper right-hand corner. When I log in, you will come now to our new platform experience. And if you haven't joined my colleague, Adam McCaden, who's head of product, he's been doing some sessions. They're recorded. They're in our webinar section of our website. They're available on demand. We're going to be doing some more through the month of August. If you take a look at the webinar section, you can sign up for any of our upcoming webinars or see any of our old recordings. We also have all of our recordings on our YouTube channel. If you go to YouTube and put in Nadex, follow us, subscribe to our channel, and you'll know when we put up new content, and you can always watch it on demand at your leisure. But this is our new platform, and Adam does go through all the functionality. So if you're looking for help with that, I would recommend looking at one of those recorded sessions or joining one coming up. The one thing I do want to point out is if you are still you still would prefer to use the old platform, you'll notice that you can go to the old platform. We're not taking it away yet. It will remain there for a period of time, but we want to encourage people to start using the new experience once we've got all of the functionality ported over, and we're really pleased with how the new platform is performing, which the new platform is much better when it comes to charts. It's got newer, better technology. The load times are faster. Your executions will be faster. Your experience is a little bit more cleaner, I think, and easier to use. But I know it takes time for people to get used to it. So if you still want to use the old platform, you can, but we're encouraging people to use the new one. The other thing I want to point out is I am in a demo account. I am in a demo environment. And now, if you were in a live environment, it would say live. The data, we do put live data into our demo environment. So we're looking at should be pretty close to what's going on in the live environment right now, but it's not always 100%. This is a demo environment, and the trading experience will be a little different because in a live environment, you've got all of the participants in our markets looking at those markets. And here in a demo environment, it's demo people. So if you, for instance, wanted to trade between a bid-ask spread in a live environment, you very well may be able to do so. In a demo, you don't know. But I do want to point it out. If you don't have a demo account, I would recommend you get a demo account as well. It's a great way to practice and learn, particularly if you're learning the platform and you're not sure where to click, practice in a demo. And then when you're ready, you can sign into it in the live environment. All right, when you do log in, you'll notice that we've got our products, binary options, call spreads, and knockouts. This is what I'm going to cover, binary options and knockouts. I will also mention call spreads. It tends to be a little bit more slightly advanced product, and I'll explain why. But it's it's important that I will cover that as well. Okay, now let's talk about binary options. Oh, by the way, you'll notice that your positions panel is down below, which I'm going to hide, and then your workspace, which is currently empty, but let's go ahead and populate it with something. I'm going to jump into binary options, and you'll notice that we have them broken out into different sections: indices, global indexes, foreign exchange, commodities, and we even have some short-term binary options. And I am going to go through a 5-minute example at one point, because I think it'll really resonate with what binary options are and how they work and how the price of those move when you see it. But I'm going to start, and we have 5 minutes. In fact, I'm going to go ahead and click on 5 minutes. Those are all in currencies, and we will go through a 5-minute example, and you'll see it. And it gets a little exciting, I have to admit. And then in the 20 minutes, they're in the indices. And when you look at our indices, in case you're not clear, uh, these are all based on the futures products, and they will settle to the price of the future. But the US Tech 100, that is the NASDAQ, that settles to the NASDAQ future. The US 500, that's the S&P 500. The small cap 2000, that's the Russell 2000, small and mid caps, and then the Dow Jones Industrial Average is the Wall Street 30. I'm going to go up here to indices for now because today is an interesting day in the markets. There was the GDP number came out and the markets responded a little negatively, and I'm going to actually go ahead and scroll down to the S&P 500 and click on daily for our daily binary contracts. When I do that, it brings up all of our binary options and the different strike prices or settlement prices. I am going to just pick one. All right, 32.32. Why not? And I'm going to click on it, and you're going to see it's going to populate the chart. I am now going to hide that. And let's talk about binary options. What are binary options? Binary options are a product. Each one of our binary options contracts, in the end, will be worth either 0 or 100. That's why it's binary nature. It's a yes or no proposition. If the answer is yes, the contract will settle at $100. If it's no, the contract will settle at $0. That's why it's binary. I think people are generally familiar with this concept. I'm going to use an analogy, but it's not a perfect analogy because I don't want to associate it with gambling. But with the baseball season and hockey coming out, I'm a big hockey fan. Will the Blackhawks beat the Edmonton Oilers? Yes or no? And you can make a prediction on what you think is going to happen. In our markets, they're around financial products. Is the S&P 500, or will the S&P 500, notice on my order ticket, finish higher than 32.32? Yes or no? And there are prices that you can trade around. If I thought yes, it's going to be higher, I can either click buy here, okay, or I can even, let's say I click sell, I could even click buy here on the chart itself. So I can click buy or sell. Notice when I do that, the chart shades and tells me where the S&P would have to finish for this to be true. So when I click buy, I think yes, it's going to settle, not trade above, but actually finish at the end of the day, so 4:15 Eastern, which is in exactly 4 hours. In 4 hours, will the S&P 500 be higher than 32.32? Yes or no? And if I were to buy, all right, let's just say let's just put 40 in here as a price. I am actually buying essentially a probability. The market is telling me there's roughly a 40% chance that the market will settle higher than 32.32. Now the reason it's below 50 is because, well, look at that. While we're talking here, it actually went to 32.32, and as the market went higher, look at what happened to these probabilities. Wow, the market's taking off right now. When there was only a 40% chance, something just happened. There's now a much higher probability. Their market's now pricing it around 70% because the market, right while I was talking, took off. Now, the probabilities for these different settlement prices will change as time goes on and as the price of the underlying moves. And I will do this. I mean, that was amazing that we just saw that little move, but you saw how the probability went from 40% to 70% pretty quickly. And again, this is the price the market is saying this is the probability that it will settle above there at the end of the day. Notice, look at this, as it starts to come down, the probability of it is starting to come down as well. Earlier, the probability for the 3244, which is higher, this was around 15%. I don't know if you were paying attention. It's now around 30%. And the one that was down here, 3220, which was in the 60s, is now all the way up in the 80s. So this is how it works. Let's just now, my 40 is no longer a good price, so let's use 65. That's right in the middle here. The market's giving a 65% chance that it will finish above 32.32. And on our order ticket, it tells you exactly what your potential profit and your potential loss are. Everything is calculated for you beforehand. If I paid 65, all right, it's a 65% probability that it will finish higher than 32.32. And let's go ahead and place that order. Watch, I'm going to go ahead and put this between the market and I'm going to hit place the order. My order was received. Wow, my order traded. Isn't that interesting? So here you can see it was an order and I got filled. Okay, someone sold it to me here in demo. That's great. Okay, so I just paid 65. Now, what did I do? Since this contract is either worth 0 or 100, all right, it's one of the other two, I risked $65. All right, because if it goes to 0, if it settles below 32.32, this contract will go to 0. If it goes below and settles below 32.32, I paid 65, it went to 0, I lose my $65. However, if it stays above 32.32 and settles above 32.32, the contract will go to 100 and I will make $35. So I am risking $65 to potentially make $35 because I bought. Now, let's just go the other way. All right, let me just give you an example. Let's pick this 3256. It's way up here. Okay. Now, let's say that I'm thinking it'll definitely stay above 3232, but I think there's no way it's going to settle above 3256. So here I might think no. All right, if I click no now, I would need it to settle below. I need to finish below. And let's just put in a nice even number, 22. That's right between the market. If I were to sell one of these at 22, okay, and let's go ahead and place that order. And you see my order to sell one at 22, and you'll actually see there's my order. And this is a demo environment, and I can see that it's in my order section. I want to sell one at 22. Who knows? Maybe someone will buy it from me. Now, what am I trying to predict here? Here, I'm saying there's no way it's going to settle above 32.56. So if I sell it at 22 and it settles at 0 because it stays below 32.56, I'll make my $22. That's the most I can make. However, if it were to settle above 32.56 and it went to, okay, so if it settles at 32.56.001, all right, it would go to 100 and I would lose $78. So that's it. I mean, binary, it's a yes or no. Do I think it's going to finish above or below a price? Yes or no. If I think yes, I buy. If I think no, I sell. All right, and I can do that on different levels. So um, hopefully that was clear. And if you have any questions around that, please, I hope you're typing in your questions to Sophie in the background, um, so that you can be clear on what a binary option is. It's a yes or no. And the price that I'm trading is the probability that this will be true. Do I think this is going to be true? Now, if you want to remember, I've got a position here in this 32 contract. In fact, I should be able to put both of those on my charts. By the way, that's kind of cool. I just want to, so you can see what I just did. On my show icon, drawings, indicators, open positions, and working orders, on my chart, I can see that I'm trying to sell one up here, and that I'm actually long one here, and now I'm actually losing a little bit of money. If I were making money, this would be green, and that's because I paid 65 for this contract, and it's now coming down. Now, this is an important note. This is a perfect example. Uh, do I have to wait until expiration to see, or settlement, to see what happens? I bought one of these for 65. Let's say I changed my mind. I'm not comfortable with that position. I think, oops, maybe I made a bad choice. Do I have to wait until settlement to see what happens? And the answer is no. I can trade out of this. All right, here's my position. I'm going to go down here to my position. This is the one that I bought, and it's going the wrong way. I'm going to go ahead and click on that. Okay. And when I clicked on it, it populates an order ticket for me to take a contra position, for me to get out. Okay. I bought one at 65. I'm changing my mind. I don't like this. I want to get out of it early and take a partial loss. Can I? Absolutely, I can. I'm going to go ahead and place my order here. I'll place one at 50. I'll hit place my order, and you'll notice that my position is now gone. And in my order history, I did, I traded out of it. Okay, now I still do have an open order to sell one at 22 up here, but I bought one and I sold one. I took a partial loss. You are allowed to do that. I could also, in theory, take a partial gain. Okay. Remember earlier in the day when I first started, and this was trading around 44, if I had bought one at 44, I could have sold one very quickly up at 65-ish and made $20 in a few minutes if I traded around that. So just because there's an expiration on a product, on a binary, just shy of 4 hours now, does not mean I need to wait until settlement to um, to see what happens. You can definitely trade out of a position early. You can either do that to limit losses, which is what I just did. I said I'm not happy with my trade. I changed my mind. You can do it to limit losses. You can also do it to lock in gains. Now, I told you I was going to do a 5-minute one because it really, you can see how the probabilities, I mean, right now the probabilities are moving pretty quickly, but because the market is moving around, I'm going to pick the Euro US dollar, and let's just take a quick peek here in a 5-minute contract. All right, this just, and so let's go ahead and hide this. Give me a second here. Let's go ahead and go to a 1-day chart and look at it in 1-minute intervals. And let's zoom in. And I'm going to zoom in on it so we can really track what's going on. Let's take a look here. Okay, and you can see the different strikes for this particular product. 117.99, 118.01, 118.03, and you'll notice that this contract is going to settle in the next 4 minutes. All right, this is where will the US dollar, Euro US dollar finish? And it's amazing. I'm going to now adjust this because it's selling off pretty quickly. Notice how the probability here is right around 50 now as it keeps dropping. All right. And the price and the volatility on these will move quickly. Look at this; it's now dropped below 50 because the price of of this currency just dropped below 117.97. I mean, it keeps going lower, and this, which was above 50 when we first started, dropped below 50. Now it's bouncing back a little bit, and in fact, let's just take a look. Oh, look at that. So um, and these will reset every 5 minutes. We'll have a set of strike prices, and the probabilities for each one will start over. Um, and you can trade. And now, if this will give you some price action, this will definitely give you price action. And this is how you can see how binary option prices and how the probabilities move very quickly. Notice now that it's coming back up. Now, let's go ahead and buy one. All right, I don't even know if I've got do I have an order or oh, I have a position. I bought one. Okay, look at that. I bought one up at 59 because I thought it was going to keep going higher. Now we're just going to see what happens here. We're just going to wait. There are 2.5 minutes to go. Uh, it's selling off now. I could either limit my losses again. I paid 59. I still have 2 minutes to see what's going to happen as it goes. If I'm not happy with what I just did, I could sell out of it. As it's bouncing back up, my probabilities are going to change again. And eventually this will either be 0 or 100. Now up here, I definitely don't think this is going to happen. So let's just go ahead and sell one. So I sold one of these at 525. Now there's a way for me to make $5. Now if it settles above 117.99, I will lose $94, or I'm going to make $5 to help offset my losses because it's looking less and less like this is going to finish above 117.97 because there's only a minute and a half to go. So let's go ahead and get out of this position. And did I sell it? Oh no, I'm still on. I didn't even sell it. Let's move that order. Let's fix that order. And yeah, I'm not going to even be able to there. I'm trying to amend it and get out. I think I did just get out of the position because there's only now 53 seconds to go. Now watch, who knows? I mean, I sold it and took most of my loss. If I really don't think it's going to make it, I could try to make a little bit back. Let's see what happens. I just sold, I think, another one at 10. Oh, look at this. It's coming back. Uh-oh. This is the excitement of the price and price movement of binary options. And notice when there's about 20 seconds to go, the prices are going to clear out. Why is that? And the reason that is because I don't know what's going to happen in the next 15 seconds. This is either going to be 0 or 100, and there's not many people that want to take the risk with just a few seconds to go. There's 7 seconds. Look at this as the countdown goes. It looks like there it is. That contract actually settled at 0. Okay, and you'll notice now on my positions they're all gone, and I was able to make a little bit of my money back. That's the other product. And notice when it clicked over and we started a new one, we've got a whole new set of contracts with new probabilities. And look at this. Now, this one that just settled at 0 is now above 50 because the probability in the next 4.5 minutes that it's going to stay above here because it traded back up through it. So these are binary options, and I wanted to show you the 5-minute because you really get a feel for what happens as you approach settlement. The volatility in the price of the option, the probability that the statement will be true or not, changes pretty dramatically. And this is where if you're trading other binary option contracts, and I'm going to go out. I'm going to step out of the 5 minutes and go back to our indices and say I'm looking at a daily S&P 500 again. Just because there's a settlement doesn't mean you have to wait to see what's going to happen. You can certainly trade these probabilities, and a lot of people might trade out of them before the last 5 minutes just because it will either go to 0 or 100, and it can happen very quickly and very dramatically as you approach settlement. So hopefully that made sense. Hopefully you typed in your questions, um, and that Sophie is back there, and it looks like you guys are keeping her pretty busy with questions, and I like it. Um, and now I will also say, and this is kind of important, I was using limit orders. All right, and you can see as it moves pretty quickly. You can also choose to use market orders. Now, I want to mention when you do market orders, there are protections for a market order. In the platform, nope, that's not what I was looking for. Under my settings icon, okay, you have tolerances for market orders. So that if you place a market order, you can set what this is, and I would recommend that you do set. Right now, I set it at the lowest level possible, which is $1. Meaning, if I put a market order over here to buy one at 27.5, and I say buy one, it would potentially pay up to 28.5 or $1 higher. If it's going to be higher than that, it will not execute my order because it's going to be outside my parameter. Now you saw how quickly these can potentially move in 5-minute binaries, so maybe $1 is too small of a parameter, but you do have the ability to put market orders in and give it some room for your order to execute outside of where it was when you initially placed the order. So it is important if you're using market orders to know what your tolerance levels are, which was in your settings section. I also want to point out that there's a live chat if you wanted to, contact us. We're trying to make it easy for you to be able to reach out to us. And I also would like to point this out, this feedback button. Please type in feedback. Every piece of feedback is seen by us. So it just because I was over here, I wanted to kind of mention it. All right, I'm going to actually go back to a limit order, and hopefully Sophie has answered your questions on binary options, because now I'm going to slide over to knockouts. Okay, so now remember, binary options, I am trading the probability that this statement will be true. It's yes or no, okay, and it's either going to go to 0 or 100. So, and my risk reward for any potential trade, so if I trade between the bid-ask spread here, 63 or 60, I guess trading down, let's put in 60. If I were to buy one at 60, I'm risking 60 to potentially make 40. If I were to sell one at 60, it'd be the opposite. If I sold one at 60, I would need it to settle below where the red is. I'd be risking 40 because it could go to 100. Right, so I'm only risking 40, but I could potentially make the 60. I sold it at 60 and it goes to 0. I would make $60. So your maximum profit, maximum loss, always calculated before you enter the trade, based upon the price that you're entering. And it will be a little different if you use market orders because it will calculate in your risk tolerance levels, assuming you get the worst possible fill. Okay, binary options, yes or no, 0 or 100. Now let's talk about knockouts, because knockouts I think are a little bit more intuitive because you're actually trading the price of the underlying. I am going to go to the indices again, and I am going to go to the US 500, the S&P 500, just because that's what we were looking at in the binaries. And I notice there are always 4 of these, and I'm going to click on any one of them. It doesn't really matter. At the moment, I'm going to hide. And I am going to shrink our chart in, and Let's take a look at what we're looking at here. Notice on our knockouts, there are 4 lines on the chart. So I can always choose a different knockout to look at simply by clicking on it on the chart. And when I do so, you'll notice that it gives me some dark blue lines, a ceiling, an upper level, and a floor, a lower level. When I am trading a knockout, and let's go ahead and click on a buy here just for fun. What am I trading? As opposed to trying to figure out the probability and the probability is adjusting like a binary option, with a knockout, you're trading the price of the underlying. Look at my indicative price up here of where the S&P 500 currently is. It says 32.32.85. 32.31. It's actually ticking around pretty quickly here. um, I am actually trading. My ability to sell or buy is going to be roughly around the indicative price of the underlying, um, and that is and that's and that's what I'm trading. And I can actually put a bid or an offer in between, just like I was on binaries. And if I thought if from right now at this moment in time, if I thought the S&P were going to go higher, I would buy. If I thought the S&P were going to go lower, I would sell. So this is a little bit more just like any other product. If I think it's going up, I buy. If I think it's going down, I sell. Now let's say I think it is going to go lower from here and I sold one. I've got risk parameters around this trade, right? It essentially gives me prices where I would be knocked out of the trade. If I sold one and it went up and hit the upper boundary, 32.56, I would get knocked out of a trade for a loss. I sold it, it went up, and it touches 32.56, I get knocked out. That is essentially my stop loss. On the other side, if it were to actually go down and it touched 32.06, that is where I would get knocked out for a profit. Remember, I sold it. I thought it was going lower and I would get knocked out. That's my profit goal. So when you're trading a knockout, I apologize, when you're trading knockouts, you're buying or selling the underlying price, and you've got distinct knockout levels where you would get knocked out for either a stop loss or a profit goal. And that is calculated before you enter the trade. So if I wanted to sell one at 32, let's just use a nice round number, 32.33. 32, helps if I type that in right, 32.33. I sold one at 32.33. If it went up and touched 32.56, I would experience a $230 loss. If it actually went down to 32.06, I would get a $270 profit. Now, if I really thought it was going down, and I wanted to say I don't want to risk $230. If I'm wrong, I want to get knocked out sooner, I would choose a different contract. This is where you choose potentially this, and it's got a different range. Okay, and now I've adjusted the range. If I were to sell one here at 32.33, let's use the same price as I was using before. If I sold one here, notice that my ceiling has come down to 32.46, and now I'm only risking $130, right? If I'm wrong and it goes up here and touches 32.46, so my stop loss is a little tighter. But notice that it gives me more room to the downside. So if it were to, go all the way back down to where it was earlier today, I could potentially make $370. So we give you 4 different knockout levels so that you can adjust your risk parameters on how much you're willing to risk and how much you could potentially make. Let's say, for instance, you thought it was going to keep going higher. Hey, we're clearly in an uptrend here. Okay, we can see that uptrend. And I think that we're going to continue on that. Maybe I choose the very first. Well, that's a little tight. Maybe we choose this knockout. Okay, let's go ahead, and I think it's going to go higher. So I'm going to click on buy. And let's use that 32.33 price again. All right, always using the same price. Isn't it rather interesting how that worked? Here, if I thought it was going higher and I bought it, if I'm wrong, notice where my floor is, 32.16, and it was definitely down below there earlier today. But if it were to come all the way back down to 32.16, I would potentially lose $170 if it came back down here. But I've given myself some room to the run to the upside, where if it made it all the way up to 32.66, I would experience maximum profit and got knocked out for a $330 gain. Now, this begets the question, what happens if from this point forward, all right, this has got 1 day and 3 hours, what if it doesn't touch either one of those? Okay, let's say it stays in this range between 32.16 and 32.66. Well, in that case, when it settles, it will settle somewhere in this range. And if it settled somewhere in this range, my profit or loss on the trade would be the difference between where I bought it. So here, if I'm assuming I paid 32.33, if I bought it at 32.33 and it settled higher, so somewhere up in this range, I would experience a partial profit. Okay, so I bought it at 32.33 and it settles at the end of the day tomorrow above 32.33. I will have a profit between up to a maximum of 330. I know that's the most I can make because that means it hit 32.66 and I got knocked out. If it settles below 32.33, so it settles somewhere down in here, right, I'll have a partial loss. It'll be something less than $170, but I know that if it actually gets down and touches 32.16, that's where I would get knocked out, and that's where I would experience my maximum potential loss. I can't lose any more than $170. So when you do a knockout, you're trading the price of the underlying with distinct knockout levels, either for a stop loss because you were wrong, or for a profit goal, you were right. And that's the goal of a knockout. All right, it gives you, and you choose which knockout level you like based upon what you're trying to do, what your opinion is, and where you would prefer to have your risk parameters. Now, again, just like the binaries, I don't have to wait till settlement to see what happens. Very important point. I don't have to wait till settlement. If I bought one here at 32.33, and let's say at the end of the day it was up here at 32.50 and I wanted to take a partial profit, I could sell it back and take a partial profit and not be concerned about what potentially happens tomorrow, because maybe tomorrow it sells off. I don't know. So you can, just because there's a settlement doesn't mean I have to wait until settlement to see what happens. I can always buy it or sell it and take a partial profit or a partial loss based upon if my opinion changes. Okay, very important. You do not have to wait. And all you would do, again, if you actually had a position, let's go ahead and just buy one. And this is, I'm just going to place this in up here. Let's place an order. 32.34. Did I did. Okay, so I bought one here, 32.34.40. Okay, I bought one right here. Now, what can I do? Well, one, I bought it there. I know the most I could lose is 184 if it went down to 32.16. The most I can make is 32.66. And let's expand my chart a little bit. Let's just go to a 1 week chart. Let's zoom in. And let's make this, sure, 5 minutes. I don't care. Okay. I could see we're in an uptrend. Maybe I'm going to go ahead and just do a quick little drawing here. And let's just put in a horizontal line. Where am I looking? Horizontal line. And let's just, and I'm just, and by the way, again, not buy or sell recommendation. Let's just say, I think that this little level here could be something. Maybe I think it's going to make it up to 32.45. Okay. Or I can even, let's Let's draw in a Fibonacci and see what Fibonacci says. I'm going to put in a Fibonacci retracement. And by the way, if you're not familiar with any of this, you can use the eye icon. I'll give you some education. I see that we're in an uptrend, so I'm going to just click down here in the left-hand corner. I'm going to go to the upper right-hand side, and let's just say it's going to continue on this kind of a trajectory. Okay. And maybe, well, you know what? That's kind of funny. As I look in this uptrend that we're going in, based on Fibonacci, it might make it up to 32.45, 32.44, 32.45. So let's just say, all right, I bought one here at 32.34. Let's say I think I would get out at 32.44. Okay. I'm just playing a price. All right. So I would want to sell one up above 32.44. I can certainly put that order in. I'm selling one above the market, so I have a profit goal. I want to get out early. I placed my order. Hmm, okay, so you can now see my order, 32.44. Here it is. All right, I placed one up above. Can I do that? Yes. All right, I've got a profit goal up above. If it rallies up to that level, I'll sell one up $10. So notice I just placed an offer to get out of my position. If it were to go up another $10 in the S&P, I placed an order to sell it higher. And you can certainly do that. I don't have to be looking at a chart in order to place an order higher. And I do know that as a stop loss, it will knock me out at 32.16 down below. If I'd get knocked out. Now, if I did get knocked out for a loss, all right, because it went down, I'd probably want to go back and cancel this order so that if it were to rally back somehow, I wouldn't end up selling one when I didn't want to sell one. This was a profit goal. So you would have to be kind of paying attention that if you did get knocked out, then you would want to then cancel that order. Hopefully, again, knockouts are making sense to you. So please, I hope you've been engaging with Sophie in the background and definitely keeping her busy with questions. I'm looking, looks like there's definitely been some questions. And it looks like Sophie is terrific. You've been keeping her busy and I like it. I did go through binary options, the probability that it's going to be true or false. You can choose longer term, like a weekly option, or you could go short term and get some real great price action in 5 minutes. Again, it's going to be yes or no. It'll go to a 0 or 100. For knockouts, if you think it's going up, you buy. If you think it's going down, you sell. You have clear knockout levels where you would either experience a profit or a loss, whether you're buying or selling. And if it doesn't touch one of those boundaries, you'll have a partial profit or loss. And with both of those, you can trade out early if you want. I do like that we've got some great tools. And again, I would recommend you look at one of those sessions where you can learn about how to put on different technical indicators. Pick one and it can help you make some trading decisions, or our drawing tools to make your chart as you see fit, where you see the price action to help you make some decisions, whether you want to buy or whether you want to sell. I did want to mention that I was going to bring up call spreads. All right, and I'm going to bring up call spreads briefly here. I know I'm going a little longer, but the reason I want to mention call spreads is they're very similar to knockouts. The difference with a call spread and a knockout is that a call spread is going to have a defined range, but if it touches one of the boundaries, you are not knocked out of the trade. You've got more time to potentially be right. So let's go back and let's go to our indices for a second. And I'm going to go to the US 500 daily again and notice that there are different ranges. And I'm going to get rid of this and let's go ahead and, all right. And you're going to see the different ranges that are currently available. All right. So here we are, the 32.20 to the 32.60. Okay, and let's just go and click on a buy. All right. Now, this has got a range, and you can see it's shaded in blue. Actually, let's choose. Yeah, that's fine. We'll stick with that one. Now, if it were to come down to this 3220 level, all right, you bought one of these, you wouldn't get knocked out. All right, you wouldn't get knocked out, but you know what your maximum loss is beforehand. And if it went up to 3260, you know what your maximum profit potential is, but you wouldn't be knocked out. So it could, in theory, go up to 3270 and then come back down through it, and you're still in the trade. Or it could go down through 3220. You didn't get knocked out, but then it rallied back up. You wouldn't have been knocked out of the trade. The difference here is notice the prices of these. 32.37 is where the price around this, and it's currently trading around 32.35. What is the difference? The difference here is you're paying a premium. You pay a premium to have that optionality. Okay, so you're going to pay more for a call spread product. Uh, Now it will be more like a traditional product, traditional option where there's going to be time decay. As it gets closer and closer to settlement or expiration, the premium you pay will be less. But you're going to pay a premium early in the week. It's going to have a higher premium. Later in the week, it's going to have a lower premium. If there's a lot of volatility, there'll be a higher premium. If there's lower volatility, there'll be a lower premium. So you can trade a range again, just like you did with knockouts, but it's not going to be a Delta One product. It will not move and price exactly with the underlying. A knockout, very clean, clear to understand. This is the price, and here's your knockout levels, and you're going to be trading pretty much right around that price. With a call spread, it's going to have a premium baked into it, and you'll have to factor that into your thought process for making trading decisions. All right. Well, with that, thank you everyone for joining us. Let me take a quick peek to see if there's any questions that I might want to try to cover um, before I let everyone go. And I actually want to show, it looks like Sophie was, I mean, this is great. You guys kept her really busy, and I like that. I'm glad you were taking advantage of that. I do want to show you something on our website. I want to make sure everyone's aware. So let me show you quickly. We're going to, oh, wait, you know what? I'm going to have to do it this way. Let's take away this. Let's go to the website. Um, I want to make sure that everyone does know under the learning section, and we are building out educational content, tutorials, and blogs, things to help you along your journey. I would say check both of these sections out. We're constantly adding more, but in the webinar section, if you don't come here, all of our upcoming webinars, in fact, this is today's session, which will get archived. We've got sessions throughout the month of August, so we've already teed them up. As I mentioned, if you want to do a deep dive into the platform itself, my colleague Adam McCaden gets into the functionality of the platform. So I would recommend check these out. Join him for one of these. More so, we also have an archive. In fact, we're going to be doing some curating of it. Adam did this yesterday, and I think it's waiting to be published, the recording of it. If you don't see the recording here, because we always do have the recording, if I click watch now on any of these, it will take you over to the YouTube channel, and I would recommend that you check out our YouTube channel and subscribe to it. Because we have a lot of educational content up here. In fact, we did a virtual education summit where we go through the basics of binaries, the basics of knockouts, technical analysis. Take a look. In fact, here, I'm going to go ahead and do this for you. You'll see. And we're going to be doing another one of these. They're virtual education summits. We're going to probably be doing one at the end of the summer with our colleagues at IG and Daily FX. I hope you're able to join us, and if you miss it, hopefully you can go back and check out the recordings. There's a lot of great content out there. All right, with that, I want to thank everyone again for joining today. Please join us for future ones as well. And I want to wish you all, first, that you stay safe in these crazy times. Second, that you stay sane. I know mine's being challenged, and I wish you all good luck in the markets.